A Look at Finance is underwritten by Janney Montgomery Scott, trusted advisors for generations.
Welcome back. Stephen Carleton, First Vice President Janney Montgomery Scott, here with our weekly Look at Finance.
Thanks, David. Good to be here.
Good to have you here. We've got a couple things going on in the economy you think our viewers need to know about. Some really important things. You know, we're going to cut through some of this financial jargon and get really down to what it means for folks at home. So let's kick it off. We're talking about car loans. You're saying now is the time to buy.
You know, you're right, Dave. There's a lot of noise, a lot of concern about interest rates and where, you know, what the Federal Reserve is going to do and everything else. And we've talked to our audience back in May about if you're going to get a mortgage, now is the time. Interest rates are going to go significantly higher. And we saw within 2-3 weeks, interest rates start to take off and, you know, almost double. So we've seen a lot of the auto manufacturers offer lease deals, loan rates that are very, very incentivized, 0% and everything else. We think that's going to go away. Interest rates are going to go higher, and so if you're looking to buy a car, to lease a car, don't put it off. Take a look at it now.
You know, earlier, a couple of weeks ago, you said that a lot, you know, we'd done car sales numbers. Of course, those were cars that were on the lot, not quite cars that people had the key in the ignition. So these auto dealers have a lot of cars sitting on the lot. Yeah,
that's exactly why it's happening, David. All those luxury cars, all those dealers, they've got huge inventory because the manufacturer books the sale when the car is delivered, when it leaves the factory. The dealership doesn't sell the car until they get that contract signed, so that's why these interest rate incentives are out there right now, and so it's a buyer's market.
All right, buyer's market. So if you want to get a new car, now is the time to do it. Within what, a couple of weeks, couple of months, we're going to see things change.
You know, interest rates are very fickle, but they've moved very, very quickly, far more than is typical. So, you know, it's hard to pin it down, but I'd say don't put it off a month or two. Go now and check it out.
All right, find a car, and perhaps you'd like to find a car that has some great gas mileage, because of course we're watching what's happening in Syria and the impact that could have on our economy, primarily on gasoline prices.
Well, this has been so tumultuous. I mean, if you look back to the early 90s, 1991, where we had, you know, Desert Fox and we had what was going on with Iraq, and gas prices fluctuated wildly as all that uncertainty was there. And then we had Libya a few years ago with Gaddafi and all that uncertainty. Well, now we have it in Syria. And Syria is a very, very tumultuous country, very unstable. We've seen it with Russia coming out, Putin talking, all of the United Nations, you know, putting their opinions out there. And it makes for very unstable gas prices. We've seen oil fluctuate pretty wildly in the last couple of weeks. So that uncertainty, we're not out of the woods by any means. We're just kind of in the middle of it. So, you know, keep an eye on that, because as interest rates go up, if oil prices go up at the same time, that puts a lot of pressure on the stock market, puts a lot of pressure on the economy and jobs.
And Syria, not a gas-producing nation, but a nation that gas pipelines had to go through to get it to either the ships or wherever to be exporting it to other countries.
Yeah, its alliance with Iran, its proximity being next-door neighbors to Iraq, it's right in the middle of the Middle East. It's very, very central. It's a very, you know, there's two sides in the Middle East fighting right now. And it may not be important from a resource perspective, but its strategic position in that part of the world is very critical.
Unemployment numbers this morning came out, and might have been a shock to some people. They weren't quite what we were expecting. There's some news why that happened, and this is not a common occurrence.
No, we had the phones ringing off the hook this morning, David. Everybody was like, wait a minute, how did these numbers come out? Well, the numbers aren't right. It was a computer glitch. We had several states transfer to a computer processing that reported the numbers, and those computers put out wrong numbers. And so they've come out and said, don't look at those numbers, they're not accurate, they'll be adjusted. But you know, the biggest thing that we've talked about, it's been a continuing trend, is the quality of the jobs, David. I'm less concerned about, you know, how many people are getting jobs. I'm more concerned about the quality of the jobs that they're getting. You know, are they livable wages like we've talked about? And most of the jobs that have come out this year, 70+% of them have been part-time jobs. Very low benefits, very low income. And that's not the kind of employment that this country is looking for, not the quality that we're looking for.
Of course, last week we were talking about these numbers, and we'll have to look for the revised numbers when they come out. But coming to the end of the summer season, we wanted to see if the economy could sustain the job growth. It's been somewhat
That's the word. Yeah,
flat,
sustain.
but at least the numbers have been, month after month, have been consistent. These revised numbers will tell us a lot in how we're looking as we head into the fall months.
Yeah, we talked about it needing to fall below 345,000 of new unemployed, and that number is getting better. But again, my number one concern is labor participation. How many people have a job, and how many people have jobs that are livable wages? And I think over the next 3-4 months, we're going to be talking more and more about this condition, the challenges that people are having where, average wage increases are about 1%, where inflation really is far more than 3 or 4% when you factor in food and energy like we just talked about, and interest rates. So those are all things we're going to look at as we go forward.
When do those revised numbers come out? When do we usually get those?
We're not sure because this is a computer glitch and this is something that's a little bit unique and not typical. Sometime probably next week they'll come back with a revised number, I'm sure.
All right. If we get them before next Thursday, we'll discuss them. If not,
yeah.
I'm sure we'll take a look at them in the coming weeks.
Thanks, David.
Stephen Carleton, first Vice President Janney Montgomery
Always
Scott,
a pleasure.
cutting through all the noise and
Yeah.
helping us understand what's going on in the markets. Thank you, sir.
Our pleasure.
Now, to see this segment and all our segments, head to the website. It's looktvonline.com. We post our look at finance there every week.